Welcome to the January 2026 edition of Student of the Market. Hopefully, your year has started off great. At THG Retirement Solutions, we are here to break down the noise, provide a clear monthly snapshot of the market so that you can stay informed and focus on what matters most to you. This month, we'll focus on a historic stock market streak, volatility trends, tech valuations, and diversification. For only the eighth time ever, US stocks posted gains of 15% or more for 3 consecutive quarters from 23 to 25. You will see on this slide, following the 3 consecutive years, the next year delivered double-digit gains 4 out of 7 times again. Average annual returns following these 3-year streaks has been 12.3% return. 2025 was a year of contrast for volatility. The first half, you had tariffs, uncertainty, which fueled the market's volatility, and the second half had a much more stable tone. There were 13 days of plus or minus 2% swings in 2025. Those were concentrated in March and April, and we saw those months perform the worst. The second half of the year was excellent. This slide addresses our monthly question, is tech in a bubble? Tech stocks continued to outperform, and in 2025, tech outperformed the S&P 500 again. The good news for tech is valuations edged lower from 40 times to 39 times trailing earnings. These are far below the dot-com peaks of 52 times. While valuations definitely are not cheap, they are supported by strong current growth and projected earnings. Sometimes we have slides in here that even surprise me. In the last 3 years, 42% of individual US stocks lost money, which is higher than I would have guessed. But of the over 2,000 diversified stock funds and ETFs, only 0.1% of those had a loss. This is why we really like using ETFs and some mutual funds where needed in our portfolios. We hear comments like, is it time for a recession? Well, the current expansion is young compared to recent historical averages. Since 1982, expansions have lasted more than 8 years, and we are 68 months into this cycle. With all of this, the average recession only lasts about a year. As a final takeaway, markets continue to move fast and headlines can be noisy. Staying diversified, understanding the big picture, and keeping a long-term mindset is how you stay ahead. As we begin 2026, it's always a good time to revisit your risk to make sure that you are appropriately invested. Please reach out to our team if you would like to review where you are and how all of this information pertains to your portfolio specifically. Thank you for tuning in, and we'll talk next month.